Today, the foreign exchange market is high-frequency algorithms and glowing screens. But for over a century, global trade relied on a heavy, physical reality. Without computers or real-time data feeds, how did traders across the world perfectly synchronize their exchange rates? The answer traces back to 1717. As master of the Royal Mint, Sir Isaac Newton made a slight mathematical error when setting the official ratio between silver and gold. That miscalculation drove silver out of circulation and left Britain on a de facto gold standard. By the end of this video, you will know exactly how to manually calculate the historical exchange rate of £1 British pound to $4.86. Before floating fiat currencies existed, international finance was anchored by the precise measurement of elemental weight. Take a look at the British sovereign coin. In the 19th century, it functioned like a battery, storing physical economic energy. You cannot simply weigh the coin to determine its value. The gross weight of a sovereign included a mixture of copper, creating 22-karat crown gold, which prevented the soft metal from wearing down in citizens' pockets. This graphic isolates what actually matters. By separating the copper alloy, you are left with exactly 113.0016 grains of pure gold. British law defined the pound as a specific mass of pure gold, maintained through the constant manual calibration of every coin in the Royal Mint. Across the Atlantic, the U.S. financial system operated under the Gold Standard Act, tethering its currency to precious metals. A paper dollar functioned as a coat check ticket, granting the bearer the legal right to claim physical gold from a central vault. As the paper burns away, we find the true underlying asset. U.S. law defined one single dollar as exactly 23.22 grains of pure gold. Because both nations defined their money using the same physical material, a natural mathematical relationship emerged between their currencies. To find the exchange rate, we use a simple ratio called the Mint Parity formula, dividing the gold content of one currency by another. Step 1 is taking the pound's gold content of 113.0016 grains. Step 2 is dividing it by the dollar's gold content of 23.22 grains. The result is 4.8665. Historically, exactly 1 British pound equaled 4.8665 US dollars. This specific numerical ratio anchored global trade for decades. It remained steady because the physical mass of an element does not fluctuate with market sentiment. If the official rate was fixed at 4.8665, could market speculation ever push the real-world price of a pound significantly higher or lower? This chart maps the physical limits of the market. The center line is our fixed parity rate of 4.8665, flanked by hard barriers known as gold points. Hitting these boundaries triggered arbitrage, where traders tashed out paper notes for physical gold to load onto ships. The gap between mint parity and the gold points was determined by real-world friction. Arbitrage required hiring steamship freight, dock handlers, and maritime insurance. To prevent gold from leaving London, the Bank of England utilized a tactic known as gold devices. If traders demanded gold for export, clerks often handed over worn, underweight coins. This forced traders to acquire more coins to hit their target weight, increasing the cost of the voyage. The 19th century global market was constrained by the logistical realities of maritime shipping and the physical hurdles erected by central banks. By calculating the relative weights of gold, traders established a fixed currency ratio that remained steady across decades of global trade. Today, our fiat money operates in an entirely different reality. Currencies float against one another as abstract data points, detached from physical mass. The logic of the gold standard illustrates the historical pursuit of intrinsic value, a desire for physical stability that once defined the exchange rate of every major nation. Now it's your turn. Using the Mint Parity framework you just learned, try calculating the historical exchange rate between the British pound and the French franc. Drop your math and your answer in the comments below.